The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got a day where you get to make a case that this market would not go down. I am not making that case. I think we've got a market that just like if you bend a spoon enough, eventually it's going to break. And one of the most interesting things is that I don't think you're going to make any money on the long side. Maybe just a little bit to the upside. Although option market makers basically didn't want to have anything to do with the downside all the way to about 1,800 on the S&P cash. So we're looking at a day that is, for me, quite puzzling. We still have people come back and buying these dips, even though the last few times really haven't made any significant money. The question is, are they just supporting enough of the big stocks to hold the S&P up as they distribute everything else? Because I look at a lot of small stocks. They did not pop back up today. They've been down, and they're staying down. Just the big stocks that everybody's heard of that are in the S&P, that are in the NASDAQ 100, are getting all the love. And some of those wonderful stocks, they're over there crying in the corner. They're not getting any love. And the question is whether or not this is just an effort to keep the indexes up, why they distribute everything else before the rest of the market tends to come down. So we're going to look at some stocks today and see how they reacted. But, for the most part, we're still down. It's not like it's an up day, although I have a feeling that it's going to be reported that way. Nonetheless, down 5 points on the S&P cash with 2 billion shares. So again, we have a down day with a lot of volume. That volume mostly came early in the day. We have some other movement, but a little less. I'm going to look at volumes probably a little bit later, but it certainly looks like we did have some severe pullbacks. People came in and bought it and basically stemmed the tide. But it doesn't look to me like anybody's willing to go out and really run these stocks higher than they were yesterday. They're just willing to run them back up. And again, what kind of market is it if you want to go long and you can only get maybe a tenth or 0.2 of a point of a percentage higher? Unless you're a high-frequency trader, maybe that's a big deal. But to this point, we haven't closed higher. We've gone down. Volume did increase. And that's it. What can you say? Okay. So, as we start the day off normally with a little bit of history, Borland International on this day in 1991 creates a software powerhouse by buying Ashton Tate, which was they were really big in the 80s, not so big in the 90s. The Office juggernaut pretty much took out Lotus, Ashton Tate, a lot of those early word processor companies from the early 80s. Analysts declare that Borland is now the dominant position in database software for personal computers. Microsoft Chairman Bill Gates says, "My largest concern is about price competition coming from Borland." Over the next 3 years, Borland stock loses 3/4 of its value and fades into basically, what can you say? Fades into the wild, wild west. No one really talks about Borland today, do they? But kind of interesting on this day in 1991. Of course, futures were down fairly strongly this morning. I'm going to call it a tsunami of bad news. I don't want to call it just overused to see the go-to perfect storm of bad news, because it was pretty much a tsunami coming over here from both Asia and Europe. Chinese export growth missed its expectations in June. Italy's industrial production fell by an unexpected 1.2% in May. France inflation production numbers were much worse than expected. Japan posted a record 20% drop in machine orders. French manufacturing was probably the worst, plummeted 2.3 in May. Output dropped 1.7. The coupon for Portugal's 10-year note surged 4%. One of their banks had to be stopped trading. But more than this, people are running out of words to say how bad the French economy is doing. Why they're not the big shots over there across the pond like the Germans are. It is to the point now where you have to start worrying about whether French can be a stable country, at least in my opinion. One of the reasons I believe that is they went after the previous prime minister who was going to start running against them before. And as far as I can tell from the reports, looks like trumped up some idea of him being involved in campaign finance problems. But kind of tough to really tell what's true and what's not. But I think just after he said he was going to run again, they brought these things out against him, and he's saying that they're trumped up. I mean, most of these good political leaders are pretty good at keeping at least plausible deniability. So I don't suspect they really have anything on him. But, of course, basically the far-left socialist government is running out of other people's money, as socialism always does. And, I'm going to be watching France. I think we're going to see more shoes, maybe a plethora of shoes drop around France here very suddenly. Of course, Japan, when it recorded its 20% drop in machine orders, tells you that there's something significantly wrong. Of course, everybody just believes the Fed will wave a magic wand so that we must buy. But I continue to think that one day there will be that piece of straw that breaks the proverbial back of the camel. So we'll be watching that. But none of this news was good. And, of course, then we came out with a little better than expected jobs numbers, which makes it even harder for them to consider keeping interest rates low. And if you look on our southern border, the direct result of $6 tomatoes because of Fed policies, and just how bad that most of the South American countries are having it because of the massive inflation that's happening because of what the Fed is doing. So we're seeing more of that. Of course, French, nothing that wouldn't fix the French people to going into a 40-hour work week and understanding that they probably have to work and not get a free ride anymore. But they kind of believe that they get the free ride until one day that everybody truly is out of money and they've got no one else to go to. But things are looking pretty bad over there. Argentina, and I'm going to have to sing it now because apparently our streaming service thinks that anything I use on fair use is somewhat dubious. But I'm going to sing, well, maybe I'll spare you. I was going to sing Don't Cry for Me, Argentina. But Argentina basically is in a no way out box. And basically they are going to default in less than 30 days. And if they make a accommodation for any other bondholders, the bondholders have the same right to the same treatment. That would cost them about $16 billion, which is about half of everything that they have in reserves. And there's no good answer for the Argentinians. But again, another country that's stepped in socialism is going to be problematic for them to ever believe that even though 6,000 years of recorded history has shown that socialism failed every time, that they will once again fail again. One of those countries that just never seems to learn that you can't spend more than you take in. Of course, I imagine we'll learn that sooner rather than later. It is a mad, very mad market. It'd be even madder if I sang "Don't Cry for Me, Argentina." But I digress. Anyway, when we're looking at mini stocks, I wanted to start looking at some of the stocks that had been out here. A few looked rather interesting. Acadia Healthcare was one of the few I had in my newsletter this morning. Wanted to see how this reacted. And, you did come down. You did kind of push farther down in this gap up. That gap happened on the 3rd with 1.8 million shares on that day. So nice buy. We're back into some of these levels. I suspect, though, in healthcare, this is a special issue. There is a court case working its way through. That judgment could come at any minute. And that may severely affect the way that these healthcare companies are paid from the so-called Affordable Care Act. But maybe it goes into next week. But I would be very careful about trading these healthcare stocks ahead of that information. Apparently what it is that there's some kind of debate on whether the law was correctly written, that the feds can subsidize individual states at will. And apparently there's whole state rights issues in it, but it's probably hyper-technical. But it could change a great deal about the way that these healthcare companies like Acadia and some of the other ones, HealthSouth, are paid, and could make a huge difference. Opponents are looking at this as a way to chip away at the ACA. And I've read basically a couple of treaties from lawyers, and it sounds interesting. So it's not like there's no chance. I think there is a chance. And maybe directly after that, if it goes in the favor of the ACA, maybe you can see some big moves in some of these stocks. But I have a feeling that some of the moves that we've seen off these highs, like the last 4 or 5 days in Arcadia, are representative of at least a little bit of nervousness on how that case goes. Now, this is an appeals court. The next appeal would be to the Supreme Court. So this is not going to be a one-and-done kind of thing. It's not sitting in the Supreme Court. But if it would be, and probably will be challenged, we'll go in front of them next November. General Motors was another one. Very interesting to see this stock up here with not quite half the volume, certainly light volume up here. For a company that's had its tsunami of bad news, kind of interesting. Light volume so far today. We'll come back and take a look at General Motors when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're off 5 points on the S&P cash, 2.1 billion shares on the New York Consolidated tape. And we're looking at a few stocks I wanted to see how these things reacted today. But certainly, we're not getting any signs that volume's coming in and people are blowing these stocks away. I'm going to get to some others here in a minute. But, it looks like they'll buy anything as long as it's a cheaper price than yesterday. They won't buy anything when it's a higher price than yesterday. And kind of a semi-brain dead feedback loop of buying. Anyway, General Motors is up here. Of course, with all the bad news they've had, actually, when I look at the chart, I would say that this was a screaming short. And I think that there are two reasons against this. One is the technical reasons here, where the energy down was fairly great to $31.70. Never really been challenged. Made it all the way back up to $38.15. And the belief is that there's no end to subprime lending in the automotive business. I think that they are probably much mistaken. And I think a lot of these car companies probably a little higher than they should be based on that. I think what we saw with Janet Yellen's discussion yesterday of actually being ready to end QE is probably more of a harbinger of us also seeing the end of low interest rates, even though they won't say that right now. I think much like they kind of said, yes, we will, no, we won't, for about 6 months on ending QE, We're in the no, we won't right now. Well, maybe we will phase. And I'm looking for either December or January to see, as soon as the elections are over, see that the Fed moves for higher interest rates. And I think that there's enough out here that tells me that they will do that. Janet may not, Mrs. Yellen. But as far as I can tell, everybody else, when you go back and look through the minutes, is they're pretty much worried about that $6 tomato in Guatemala and asking why. And, why people are leaving in droves from those countries, and that is because our financial policies are really not making anything any better. And we'll see how that does. Anyway, General Motors did give a huge and valid sell signal. That is the third test of the $38.05 high from March 6th, 28 million shares. And we got into that with basically 17 million shares on the 2nd of July. Of course, as we go sideways, you really don't get anything. We've got about 5 million shares today. And again, I'm saying that what we're really looking for, and I was anticipating this morning and put on some more shorts, was a close back below either a 9-day or 3-day displaced moving average. Saw a lot of those hit this morning, and I think I still like my positions. We'll see how the end of the day comes out. When you go to a 9-day moving average, you see that General Motors is sitting on that. I suspect, like a lot of the stocks that have already fallen, that any break below that is going to be the huge acceleration to the downside. When we look at stocks like 3D stocks, basically the big volumes to the downside have come when you've closed below that. 3D Systems shows us the basically volume on the downside for the first time really increased on the 8th. And that was the break below that 9-day moving average or the 3x3. But so many of these stocks are doing that. They are still on the weak side. Let's say, especially in something like this, a go back and touch that 9-day moving average would probably be a good spot to, and if it matches up with an ABC down, good spot to go back and take another swing at these, as this thing had a huge blow off top. It's got kind of a history of them. I've made I shorted one of these blow off tops in 3D Systems, but not uncommon. Let's see what else we have. Did want to get back into hurricane season, and I put this one in the newsletter too, but I'll share it with you also. One of the stocks that doesn't really look too bad out here, and I suspect it will hold up through the summer better than most. This is Generac Holdings. Generac, of course, the maker of emergency generators, they had a huge amount of business come in after, of course, the flood in the Northeast, and, of course, also after several hurricanes and bad weather. But we'll look at this, talk about it a little bit more. But one of the better looking stocks out here in the market. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Anyway, we were looking at Generac Holdings, and in one of the better looking stocks out here, this thing took off with about 4 million shares. What is that? Just about 4 million shares. That happened. This gap up is on November 24th of 2013. That was right around, of course, the storm up there in New England. And, of course, they got a whole bunch of orders for standby power supplies. If you're not familiar with these things are pretty big, about the size of one of those giant 500-gallon propane bottles in the back, and most of them actually do run on propane and have a propane bottle next to them. But as soon as power goes off, it has an automatic flip over. In about 5 seconds, you got power back to your house. Anyway, they had a huge backlog of those. Their numbers look pretty good. Basically, they caught up with all those, and this thing's been coming back down since. But more and more, we're probably going to see, with more and more people living on coasts and in areas that have things like hurricanes and all kinds of bad things, fires, floods, earthquakes, the whole kind of revelations in the Bible kind of thing. But when we get to that, this one actually not looking too bad. You had a test back here on January 24th with 3.2 million shares. So, about a third lighter, went to a higher high. What you probably say is that you had that huge push on the 14th of March, and it had fairly light volume, 1.2 2 million shares to get up to those highs. We did go through the previous high on decent volume, but the volume we really needed to see this thing launch with back then was the October 25th of 2013 high that had about 3 million shares. Basically went above it. Once it closed back below it, of course, pretty much in firm bear territory. But this is a stock not to probably be trading now, because my guess is this thing goes sideways or maybe even fills the rest of this gap. But if probably one of our guys in the den that's always watching the skies for commodities, this might be an interesting stock, of course, on any play of hurricanes coming close to the United States or any other big disruption to electric service. Let's see what else we have out here. I want to look at a few others. Hartford Financial. This one, another one from my newsletter this morning, was fairly interesting. This thing, probably the most interesting, was the doji yesterday that we had. Basically an open and close at the same price with a little bit of price spread out here, one of your standard dojis. But this thing had been barking up against this December 23rd high that had 4.7 million shares from 2013, $36.76. Did go up, broke it by a dime. Basically you had 3 million shares, so you were about 1.2 million shares shy on it. Volume never did come in. Your doji yesterday would have been the signal that you could have pulled the trigger on it short, or if you were long, that was it. But when you really look at the energy, if you look at my power law vector indicator numbers, this last leg had 2.3, and you had some fairly decent legs, but probably the equal one to it would have been this one from March 7th down to the low on April 11th. And, probably about 10% stronger on that down leg than this up leg. So not a raging short, but probably a good indication to sell this thing yesterday if you were long. It got to the top and really didn't do much. Ken Metal, this one's kind of an interesting. Not a lot of stocks out here that have hit lows on lighter volume. This one's got a little doji out here. So this is probably the halfway move down or the bottom of Ken Metal. Symbol is KMT. When we look at this one, the May 30th low is what we're testing. That had 450,000 shares at $44.76 for that low that day. We went below it today by 4 cents, and so far volume is light. So, you're probably going to get a small bounce out of here and then a pullback even back to this level again. So there is the opportunity. This thing kind of opens up a little bit tomorrow. You might get a little bounce out of it. Probably wouldn't play it. I'm thinking that maybe one more bounce out here, and that would be interesting. But that would be it. But I digress. MNTA, Momenta Pharmaceuticals. Saw a lot of action in the IBB this morning. In fact, it's trading out here at 255 right now. So not really any higher, but it got down to 250.86 today. Momenta Pharmaceuticals, MNTA. Kind of interesting in this one is it had a nice little gap up. That gap was from May 15th on 1.6 million shares. Very light volume back into that gap today. And I don't know much about this one. I don't play the pharmaceuticals. But I thought it was one of the few stocks out here, too, testing a gap on lighter volume. So we'll keep an eye on it. Wanted to also look at some of these silver stocks. I had been talking yesterday about the potential for a reversal in at least some of these miners with a very light volume. And Pan American Silver was one of those, PAAS. This thing had 3.3 million shares on the February 21st high, 15.63 million share, or 15.63 for the price on February 21st, 3.3 million shares. We're into that today with 1 million shares. And this is not the only one of these gold stocks out here. Not all of them, but there are several of them out here that are coming up and giving what could be at least some short short-term signals on what's happening in gold and silver. And, of course, this market's acting just wacky enough to throw us a curveball. Gold itself up, up $13 on the day. And silver, what do we have? Silver up here, 42 cents on the day. Wanted to see, still seeing some movement. Wanted to check out UNG. We've been talking about that for the last few days also. I wanted to get to that in this segment. We've been talking about how this came back into this gap on lighter volume, and we still have it down here, but no signs of a reversal in this one today. 8.8 million shares. I'm looking back on the close, which was pretty low on February 10th at $22.50 with 240,000 shares. Is that right? It's got to be more than 240. 200, yeah. Is that right? No, 24 million shares, excuse me. I thought I saw it. It's just a speck on my screen. It's not an actual digit. Anyway, 2250, 24 million shares. And that, of course, gapped up the next day, the 11th of February. So we're back into that gap now. In the last 3 days, 8.8 million shares, 5 million shares yesterday, 3 million shares today. So not so bad. Now, there's a couple more of these gaps out here. Maybe this thing goes a little bit further. But I'm going to be watching this fairly closely. I have a feeling that if you're going to buy this and go long, I'd probably be long back into probably maybe mid-August or something like that, or as soon as the heat comes up. If you start seeing those weather maps and everybody saying that the Midwest is getting scorched, that probably will be the low in natural gas. But I have a feeling that a lot of people said that they couldn't refill all of what was used over last winter, and I have a feeling it's being refilled a lot faster than a lot of people think. Still think this is a good play. I just think it has more to do with seasonality and probably a little heat in the summer, maybe a hurricane, but you're going to need some kind of catalyst to probably move this thing off the bottom, but probably pretty close to where it's going to be. I don't think there's a lot of downside risk in this one, but certainly nice light volume. Dr. Reddy, this was one we brought up, I think, a couple of times. And just wanted to see how this one did. It did kind of a light volume pull down today, but I think this may be more of a problem that people think. Came back up, this thing capped down rather horribly on the 13th of May with 580,000 shares. Back into that on the 7th with 380,000 shares. Of course, pretty much reversed as soon as it touched that gap, as a lot of these have been. Coming back down. Just kind of interesting to see. Not a lot of volume down out here, which means maybe we get another little move back up here in this 44 area, but certainly it looks like there's no existing test of this May 21st low at $38.23. Starbucks, wanted to see that also. We've been talking about this as not a potential short, but maybe a potential high, mostly because it was going up against the March 21st high that had 9 million shares at $78.68. Of course, we went a buck above that, kind of came back below it, but you would still need to see a close below 78.64, and we are above that now. So not probably ever a short, but my guess is that if this market does pull back, you're probably looking at about 76 bucks on this thing fairly quick with that gap of the 19th open from last month. Another one I wanted to look at is SLW, which was Silver Wheaton. We've been talking about that in the newsletter a little bit, about how some of these things did look rather weak, just on volume testing the previous highs. In the case of Silver Wheaton, this March 14th high, $27.14, 4.5 million shares. Basically came into it with 5 million shares yesterday. So you were pretty interesting day. But as soon as we go above it, we've got 3.9 million shares. Going to be close. So probably not actively shorting any of these. The energy from the low up here is pretty good, but probably setting up a consolidation range, maybe a 50% retracement on some of these of this last move up, and then the next move, maybe you go and break higher. Another one out here, and of course you can always give me a call at 877-927-6648. I'm extremely bearish even after this push up here today. I have a feeling that I would not be surprised to see a Dow down 500 points in the next 2 or 3, 4 days. VNTV is the January 16th high we're going against, $34.42. This one was about a third light as it came into that high on July 8th with 2.2 million shares. We are and do have a pullback in it. And probably just to be safe, you would want to probably see this thing close below that high of the 15th of January. That close was 33.69. And I think we're probably pretty close, 34.04. So, if this thing maybe ticks down a little bit more, probably going to see a lot of these stocks that are in fairly decent trading ranges. In this case, this thing could pull right back down to the $28, $29 level. And that would just wouldn't be a huge problem, but just a huge trading range in some of these stocks. Wanted to see what else we had out here in briefing. Let me update this real quick and see if we have anything else. See if there's a great deal out here. I did want to get to lumber liquidators. I think, what is it, LL? It's a symbol on that. Yep. This one fell out of bed, and that bed was probably the top bed of a bunk bed. They came out with some fairly wicked statements, and one of the things that we could talk about was just how bad they think the new business for homes are. On the back of that, I also saw a lot of news in some specific areas. Phoenix, probably the worst. Looks like it's back into a depression, at least in its housing market. Numbers really horrible yesterday from Phoenix. So, maybe the top is in some of these housing stocks. I think I've got a housing list. Let me see if I can just pull that up real quick and see how they are actually doing. But I think, is it right? Home builders, there we go. Let's just take a quick look and see how they're doing today as far as percentage change. Lumber liquidator, of course, the worst. Somebody in the same area but not getting hit hard is Buffett's Hawk Carpets. They're off 3% today on that probably same news, just in the way that Lumber Liquidators has couched what happened. But they hit their low on higher volume today, so you got to watch out for this whole housing sector, at least for people that are buying things to put in their house. The April 8th low out here, $128.54, 1.7 million shares. Hit it with 2.7 million shares and bounced. But my guess is you're going to at least get another test of this low here today, and watch out to see if that breaks. We're going to probably look at the rest of the housing sector before we end the day here. Be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Into each life, a little rain must fall. And I was talking to Andy just a little earlier today. And maybe everybody out there can just send a little bit of white light to him on what looks like a cloudy day. I don't know if he wants to get into it, but nothing that's going to hit the front page news, but I feel for him. I hope he has a good day. Anyway, USG out here, a little bit better looking. Some of the ones that to me looked very dubious, I think I brought this up last week, was DH Horton. This thing had a high volume high back on February 26th at $25.06 with a test of 5.8 million shares on the second, and this thing has been pulled down. This whole housing sector looks rather weak, and I suspect that Phoenix is not the only area that's probably going to see at least some weakness over the next few months. Certainly when we look at Home Depot, a lot of these stocks, anybody that actually is putting things in or rehabbing houses seems to have had at least a little shock today. Home Depot, no difference, but volume has increased. Certainly has this nice high volume low gap down here about 77.50. My guess is this thing's going to work its way back down there, and if it has enough volume, you can break it. My guess is it's probably going to at least stop there and bounce first. KBH Homes, some of these stocks, like I said, Doji, and the question is this the move back up or the halfway move down? And you're probably going to get the answer to that tomorrow. If you get yet another little gap down, that's probably the halfway move in KB Homes, which would probably take it back in to probably about 1650. So keep an eye on that. Lennar Homes, a little less interesting on here. Mohawk, of course, we talked about that one. Some of these other ones that are affiliated with it, Select Comfort, these people have been hammered down. Didn't even get back to the gap, that huge gap down from October 16th where this thing got blown apart. Volume has been light. A little bit more support out here. But you do have a high volume low at $15.32 that's untested. So you'd have to worry about that. SPF, Standard Pacific. A lot of these things look like they could be ABC downs. Didn't really see the volume in there today. Toll Brothers, the other one we want to be looking at. A lot of them look like they could be ABC downs. A lot of them don't look so far like they have the energy to break their previous lows. In the case of Toll Brothers, that'd be down to $33.26 from May 15th. The one that does, like I said, probably give you most pause is that USG is down here with 1.4 million shares. So the volume is light so far today, and it has kind of retraced a little bit. But if you're not selling wallboard, you're not building houses, and that should tell you a lot, and maybe being the canary in the coal mine. So TPX. Dave, where do you see QQQ going from and TPX? See if we have time. TPX. Tempur-Pedic actually looks a little bit better, doesn't it? I wonder why SCSS looks so poor. I'll have to research that a little bit, the dichotomy between those two. Thanks for bringing that up. And the other question is, where do you see the QQQ moving? I don't see the QQQ moving somewhere because it's so heavily balanced into Apple. But I can tell you that options show that we could go to 1,800 by a week from tomorrow, and that would be just fine with the option market makers. So there's very little upside to this market. There's a huge potential downside. Not that we're going to get it, but there is a lot of room before option market makers feel any pain. We'll see you tomorrow in studio.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.